Volume profile is the greatest indicator ever created. When you know how to use it, it will tell you where the market is going next with a level of accuracy that almost feels unfair. It's literally a cheat code built into the market. But the problem is, it's also one of the most complicated and overwhelming tools in trading. Price action can already be confusing, but adding volume profile onto it can make it feel impossible to understand. Because being able to see the volume by price is an insane advantage. You're not just looking at the volume over a certain time period, you're looking at the volume at each price point. It's like having an X-ray on each candlestick. That's the feeling I had when I first added it to my chart. I knew that it was showing me something nobody else could see. I just didn't know how to read it yet. But I knew that if I figured it out, I'd unlock the keys to the market. And I did. But it took me a while to get there, because the way most people learn volume profile makes it 10 times harder than it needs to be. The problem is, just like price action, support and resistance and other concepts, it's very easy to go down the rabbit hole, especially when it's something that looks as complex as volume profile. And the more you learn, the more confused you get. Because now you're staring at this indicator with 10 different things to look at, and no idea which one actually matters at the moment. There are tons of different volume profile types and even more ways to trade each one of them. You have session profiles, weekly profiles, composite profiles, time price opportunity, and a whole bunch of other ones. But you don't need to get lost in all of that. It's not about different volume profile types because they're all showing the same thing at the end of the day. The key is how you use it. So the most simple type of volume profile is the visible range volume profile, and you can find that easily on TradingView by typing VRVP in the Indicators tab, and then switching the row size to 200 in the settings. And the VRVP will take whatever's in the visible range on your chart, as the name suggests, and plot out the volume by price. So if you move your chart or zoom in and out, the values of the profile on the right will change. And the reason we change row size to 200 is because that'll split the volume into 200 separate bars. And that means we'll be able to spot the differences in volume precisely, compared to if it was something like only 20 or 30 bars. So that's going to be the main thing you're looking for when you map out the volume profile. You want precise volume bars, so you can see exactly where the volume is highest or lowest at different price points. If you only have 20 bars, then all of that volume is going to be compressed into one bar, and you won't be able to get any useful information out of it. I mean, sure, you'll be able to see that a certain price area has a lot of volume, but you could already tell just by looking at it from the candlesticks. That doesn't give us any value. What's valuable is knowing the exact amount of volume traded at every tick. So when using the volume profile, your main purpose is to find out the volume traded in a certain area over a number of days or weeks, depending on how you're trading. You want to optimize everything toward that. Now, the volume profile has a lot of extra tools on it, like the value area high, value area low, point of control, developing value areas, and a bunch of other things. And the issue with a lot of these is that they distract you from the actual purpose of the volume profile. These tools are just an extension, sure, but this is where most traders get trapped. They start focusing on the tools instead of the data. For example, the value area is where 70% of the session's volume was traded. So you get a high and a low boundary, the value area high and value area low, and traders use those boundaries as potential reversal zones. Failed auctions are when price moves outside one of these boundaries, fails to attract any activity there, and snaps back. So if you're using the volume profile and looking for failed auctions as a setup, you're essentially using a powerful institutional tool to draw fancy support and resistance lines. It might work sometimes, but you're leaving most of the edge on the table, because the real power of volume profile isn't in the boundaries or the labels or the setups built around them. It's in the raw data underneath all of it, the actual volume at each price point. That's what tells you where the market cares, and more importantly, where it doesn't. And once you actually internalize that, the way you trade the market will change forever. So here's what you actually need to know to trade the volume profile and profit in the real market. You don't need to know any setups or patterns. You don't need to memorize anything. Actually, that might harm you. All you need to do with the volume profile is understand it intuitively. Because the market isn't just a set of repeatable patterns. The reason it's so hard to be profitable is because it's much more chaotic and deceiving than that. But when you strip away all the patterns, the news, the narratives, and the indicators, what's actually happening is simple. The price is constantly searching and moving toward liquidity. That's really all there is to it. Every move in the market is made by someone with size. Not retail traders like you and me, but institutions moving hundreds of millions of dollars at once. And that kind of money leaves very large footprints. Ones that we wouldn't be able to see with just candlesticks, but that we can see very clearly with the volume profile. So when it comes to trading volume profile, that's all you need to know. You need to look for high volume nodes on the volume profile, which is where the volume clusters. Since institutions are constantly placing orders and seeking liquidity for those orders, the price is constantly moving from one high volume node to another. Now, when you look at the high volume nodes here, you'll notice that the price has significant reactions to each of these levels. And the more prominent the node, the more reactions it has. And you also want to make sure to avoid the areas where a high volume node isn't clear or where the volume all looks the same. That's the market telling us that this area didn't have a defined point of interest for institutions. And for us, that means it'll be much harder to spot where the market will move next to find liquidity. So we want to focus on clear, high volume nodes and then look to take trades from one high volume node to another. Once again, you want to make sure that all the relevant data is considered when using the volume profile. That might mean the last few days or even weeks of price action, or whatever is relevant for the volume at that current price level. You want to make sure you get the full picture with all the recent data you need, and from here you just wait for the price to be at a high volume node and then ride it to the next high volume node as the market searches for liquidity. Then your only job is to figure out which high volume node it moves to next, either the one above or the one below. And for that, we can use a tool called the cloud, which will read the trend in an instant and give us our bias. So if we look at that on our chart, we see that the cloud is sloping down. Now think about it. We have a prominent high volume node to the downside and a prominent high volume node to the upside. You don't know exactly where the price is going to move or reverse, but you can get a pretty good idea using this. We also see that the price is in a pretty clear downtrend with lower lows and highs, so that tilts the odds in the favor of sellers. So really all you want to do is enter inside one high volume node and exit at the next one. That's the simplest and strongest use of the volume profile. Now the volume may change and the profile might look different over time as new volume gets added, but that's why we need to look at only the relevant volume for the trade. You don't need to look at the volume from last year, you just need volume from the most recent time frame, because that's where buyers and sellers were active most recently, and they're likely to react again, at least for this short-term move. So when we're precise and understand how the volume profile works intuitively, we don't need to memorize setups or learn patterns or try all kinds of different profile indicators. We just need to understand one thing, where the volume is and where it is not. That's the question the volume profile was built to answer. And once you can answer it consistently, every trade you take has a reason behind it, something you actually understand and trust, not just something you're guessing because you saw a pattern of it before. And that's what separates this from every other approach in trading. You're just reading the map and following it. So if you take nothing else from this video, take this. Zoom out to get the relevant volume in view and look for high volume nodes. Then trade from one to the next and use the cloud to tell you which direction. And by the way, if you want help implementing this, I work with traders one-on-one inside my accelerator program. You'll get one-on-one coaching, weekly group calls, access to my custom level indicator, and a private community of traders all running the same system. If you're interested, the link is below, and I'll be seeing you in the next video.